Hello, my name is Darius Kraucionis, and welcome back to Founders Unchained, the show where we sit down with founders, builders, innovators, and investors, where we share their real-life experiences, what it takes to build a startup from scratch. And today we have a special guest, Leonarda, who is working for CMC Labs, which is CoinMarketCap Labs, and she's responsible for the ecosystem growth. Welcome to this episode. I'm really happy to see you here. And let's start from the beginning, who you are, what is your background, and what actually CoinMarketCap does for the startups.
Yes, hi Darius. Thank you so much for having me here. It's a pleasure. I always enjoy attending various podcasts and spaces. I'm passionate about sharing the experiences, lessons for a lot of startup founders, other partners, in the network and beyond. So thank you for this opportunity. As you mentioned, yes, I am CMC Labs and launch ecosystem manager, which means I work with startups all day, every day, from filtering the best founding teams, the most innovative products, to onboarding them to the program and doing a bit of portfolio management, helping them with partnerships and fundraising and various opportunity discoveries, obviously together with the actual marketing accelerator that CMC Labs is. But a little bit about my story, I actually jumped into crypto very accidentally. I was following my legal path in the university. I studied international law with a few other disciplines combined, and this is where I wanted to head my career to. But then one day, my roommate's boyfriend's lawyer reached out to me and said, "Look, I see, there's quite a bit of overlap. Maybe we can work together. I work in this weird industry, with cryptocurrencies and Bitcoin. And I think, you would be able to learn the ropes and help me out quite a bit." I was like, okay, that's interesting. I obviously have heard about Bitcoin, but that was the extent of it. That was, I think, beginning of 2021. So quite an interesting time to join the space as well. And I've learned a lot about technology, about what it takes, to be a founder, what it takes to run a company in either of the spheres within the industry. And it really fascinated me. And after, I think, half a year of, doing some legal work and documentation, I thought, I want to be a bit more of a contributor. I think there are a lot of different skills that I can learn. And that's when I transferred to being an investment analyst at a Web3 family fund. And that's where I really figured out how to evaluate startups, how to start from scratch, what's the actual due diligence and what does it entail, how to talk with founders, how to talk with investors, right? We were an investor ourselves, but it's not all pink glasses for us either, because being a small investor in the space, that's also hard. You need quality deal flow, you need quality connections, you need to make your name known in the industry as well. Otherwise, if you want the best opportunities and the best founding teams, they might not want you because, what is the additional value that you can give them? So there were a lot of amazing things that I've learned, being an analyst, talking with projects, talking with investors. And then after a few years, I founded my own startup. It was called the VC Whisperer. And it was basically a venture capital research media platform. I was aggregating other VC firms' content and investment thesis and expectation articles for the year or quarters, right? And what do they expect, to pick up in the next few months? Because I believe that this is the content that you can utilize the best. It's something that is, kept behind closed doors quite a bit, both in Web2 and Web3 worlds. Like, our industry is not any different in that regard. And I figured if more people were able to access it, because obviously, how many of us would know all these VC firms, where to check that content, right? How to get that, gate-kept information. And I already had a bit of a go into that world. So for me, it was really decentralizing the knowledge. It was really about expanding the bubble. I started working with even more startups and investment firms, and it became this ecosystem of its own, right? I could help a lot of founders with those connections, with that advisory, with that hands-on support. And then for the investors, I could also bring up their value in terms of additional support that they could give to projects, additional brand that they could build out. And it was a very interesting experience. I ran the VC Whisper for a couple of years. And then in the beginning of 2025, so a bit more than a year ago, I decided to join CMC, so CoinMarketCap, and especially CMC Labs from the accelerator perspective, because I thought the VC Whisper is a really good start in where I want to see the industry is going and my own career, but I wanted to do a bit more impact, and that's very hard to do with a new brand that you're building out yourself. And I figured that with CMC, I could be a bit more useful to founders themselves, to even investors, right? To the partner network that I build out. And yeah, now I've been 1 year at CMC. I've worked with a lot of projects. I jump on calls, do due diligence, review quarterly and monthly updates, and help our own portfolio in this kind of portfolio management role as well to scale and then reach the new heights. So yeah, I think that's a good stopping point for the story.
Yeah, so thank you for sharing this experience. And now I believe it's really good shift in your career. And to be honest with you, I noticed you, it was like 2 or 3 years ago when the first time I saw you in one of your YouTube channels, which was like the VC Whisper. And at that moment, I was working on research, who are the investors in crypto space and Web3 space. And I was looking for the names. Some of the points I just actually catch up in your YouTube channel. I was really follower at that moment. Really glad that you came here today to share your experience, because I think you had many conversations with venture capitals. You also was discussing with a lot of startups. And I think, the people who will be watching this episode, they are the builders themselves. We are thinking about, building or starting to build something. So I think, definitely this episode was going to be very valuable. I really want to get as much as I can from you today during this show, just to raise a couple of questions which might be valuable to the audience.
Yeah, really appreciate it. And that was my goal as well, goal audience, I guess. The startup founders and those people that are thinking of building yet another startup or their first one. Because again, it's very difficult to research those things. It's very difficult to get in touch with the decision makers, at these big VC firms. Like most of people can't even reach that whilst they're building or have built a successful startup, right? So sitting down with the head of Animoca Brands or Multicoin Capital, right? Or other really big VC firms in the industry, I've learned so much. You can read as many articles as you want, but that conversation where it's really flowing from the experiences, from the knowledge, from the, what's happening in the market, being put in that 1 hour episode, it can really, really amp up your game quite a bit. So that was my goal as well.
Yeah, I agree 100%. That definitely works very well. Speaking about the CoinMarketCap, some of the people I know, we raised the question, what is the CoinMarketCap? How to get to the right people? So can you just explain a bit about CoinMarketCap, what you actually do, who is your ideal client, let's say, and how the people can approach you?
Yeah, that's a really good question, because although in the industry, a lot of people check CoinMarketCap daily and probably 10 times a day, like myself, I do meet quite a few people, especially that are, dipping their toes in the industry and need those data places where they can start learning about crypto, start learning about the projects, and CoinMarketCap is the perfect place for that. So in short, CMC is a token data platform, right? We aggregate majority of tokens that are launched in the ecosystem. We aggregate, the startups that are launching those tokens. So when it comes to their tokenomics, when it comes to their documentation, right, like white papers and then social media and websites, you can find everything there. And obviously from the token side of things, especially for retail, it's very important to see who has the allocations, right, that the founding team has issued, who has the biggest market cap, right, who has the biggest potential to remain growing or make more money or just remain relevant in the space. So that's what CMC shows. And we have a lot of interesting different features as well. So for example, CMC AI has been released in 2025. And basically it's this AI crypto strategist that helps you review the content, that teaches you, of why that coin was up that day and that was down, right? It teaches, why the market sentiment today is at 20% fear or 80% greed, and what kind of actions you could take if we wanted to maximize on that market sentiment. Then we have different tools like CMC 20 and CMC 100, which are liquid trading indexes. For example, CMC 20 aggregates CoinMarketCap's top 20 coins without stable coins or pegged assets, which means, no wrapped coins, no staked coins, just pure coins of projects like we have Bitcoin, Ethereum, Arbitrum. So you take these 20 and it becomes like a regular index that we have in the Web2 world. By buying that one coin, you can have basically exposure to 20 coins underneath it, right? So we are trying to improve CMC to being not a dinosaur in the industry, because living for 13 plus years, it can get difficult to improve. It can get difficult to innovate, right? If you don't want to pivot completely. I mean, CMC has like 70 million monthly active users. We have the biggest market share in terms of the token data, right? When it comes to DEX aggregators, when it comes to sexes and other platforms. So it's very important that we keep offering people new utilities and new ways to interact with the platform, and then to keep them checking us every day, 10 times a day. So I think for regular user like you and me, these may be the most interesting features. Obviously, there are other things that especially founding teams can utilize, like CMC API, which is basically the most comprehensive token and DEX data that startups need to utilize, for their own products. Another options are obviously advertisement, right? Like to put yourself in front of the eyes of all these millions of users, both Web2 and Web3. Obviously, majority of Web3 people are checking us, but it's very interesting to be this bridge for people that are curious, for people that do want to learn, and they choose us as that starting point to jump from.
Okay, thank you. And what is the process if I, let's say, have a project or I have a token I would like to be listed? Do you have any specific requirements for that?
You have to have healthy tokenomics to be able to list on CMC. Right now we have two tiers. There is a free tier and CMC priority, which is a fast track. So everything is automated through CMC forms. So make sure to not fall victim to a lot of impersonators and agents. Fake agents may claim them that, we hacked the algorithm and, we can list you cheaper or quicker. Like, that doesn't work. Everything is very streamlined at CMC, so make sure you go through the official forms. And if you're not sure, there are always contacts to reach out to, like myself, like my colleagues. On CoinMarketCap page, you can find quite a few of those emails or Telegram handles. And you just need to fill out those forms. You need to showcase, your project, your tokenomics, your allocations, etc., etc. And then our listing team, will decide, yes, does that fit our criteria, or does it need some improvement to comply with the requirements?
Can we say that actually you are the person who is the right person for people to come and actually discuss, this onboarding process and listings and so on? How the people can actually find you?
Yeah, always. I mean, I'm not, a direct member of the listings teams, but because I work with projects so often, I have all the right forms, all the right contacts. So if you do need some more information or, access to those forms, feel free to reach out to me directly, either via my email, leonarda.r@coinmarketcap.com, or my Telegram handle, leonarda_venture capital. And obviously you can find that on CMC Lab's website as well at the end of the page. Feel free to go through those. Obviously we have official support channels. Sometimes they take a bit longer because of the amount of requests we have, but there are definitely people to help within the team, not necessarily within the listings team even.
There are a lot of people right now on social media who sometimes impersonate the people. So how to make sure that I'm speaking the right person? And do you have any kind of official names in your website which says that this person is working in your team, and this is how I can prevent myself?
Yeah, so for example on Twitter, we recently did get affiliated badges with CoinMarketCap. So for example, if you go to my Twitter, like you can see a little CoinMarketCap sign next to it. So it verifies that I'm indeed an employee of CMC and you can trust me. Another way is to ask for their email address, because we also have verified email addresses. So whenever you start typing out an email, for example, to me, you can see CoinMarketCap verified, everything is there out in the open. And a third way is to indeed go through the official like website and materials, it takes a bit more time. As I mentioned on the CMC Labs page, if you scroll to the very end, there are two contacts, me and my colleague Jin, that take care of CMC Labs. If you go to a media kit, you can see our BD people that are responsible for it. So it might take some digging, but in this way at least, but you can definitely find the right people. But honestly, this is the reason why we try to streamline everything through the forums, through the official channels, because obviously the more you grow into the industry, the more people will try to take advantage of that. And there's always increased risk with these kind of companies. So it's always best if you can double check, triple check, or just go through the official website.
Leonarda, after working with so many startups and venture capitals on fundraising, what patterns or mistakes notice the most often?
Yeah, I really love this question. And I think I keep being quite repetitive, but I think it's not being, talked about enough. So here I go again. But I think the biggest mistake is really following the same blueprints within the industry. And that's just the nature of us as humans, right? Like we see someone being successful, we want to copy them to be successful ourselves, right? Like if we see them raising this much VC money or launching their token with this time period or launching a token at all, pivoting to certain sectors, like we want to do the same because we think that, we will capture at least, half of the share of profits and the share of success that they have gotten being, a first runner of that particular product or industry, etc. And I think we're really missing the key model of business from the Web2 world, where we have a ton of successful small scale and mid scale businesses. Obviously, there are a lot of unicorns out there that are leading the way, that are capturing all the brand exposure and then revenues, etc. But we have so many profitable businesses, that are so happy to build within their own niche, to sustain their employees, to make revenues, and then to just issue the quality work that they're supposed to do, right? In Web3, we all want to be the unicorns. And maybe it's because we're very early as an industry overall. Maybe it's because, we're quite greedy as well, because, with crypto, at least it used to be so much easier to get successful, to make more money, right? To experiment and then see what works out. Where in Web2, not all of us would have such opportunities. So I think just figure things out for yourself in terms of the sector you're building, the product that you're building, for whom you're building, and making the revenues that, make sense for you. You don't necessarily need to scale to 500 people and 30 different business areas that you're working on. If you have this perfect solution for which you can find 5,000 paying customers and completely sustain yourself and then scale it, to the levels that make you profitable and still lean, please go do that. And I think a lot of startups, a lot of businesses in crypto, they try to overachieve. They burned and crashed down, right? Because they didn't have enough funds. They didn't have even enough grit. They didn't have enough product to push it forward. I think it's quite ridiculous that we're still in that kind of bubble. But obviously that ties in with another point, is that we're all so used to raising VC money. That puts so much more pressure, so much more restrictions on decision making from the founding team side. And I think honestly, we really undervalue the bootstrapping effect, the early revenues effect, the fact that you didn't need external money to get to the paying customers, to get to the utility of your product. It's really miraculous. It really shows the product market fit, at least the initial stage of it. And we think if we raise VC money, we're going to scale more, we're going to get all this networking effect, we're going to get so much added value. And some VCs do that. There are a lot of perks, but a lot of the time it's purely for capital. And founders really forget that VCs are in it for themselves. They don't just, care about amplifying the industry. Their whole goal is not to help you scale to the new heights just because your product is so great. Their goal is to make money out of you. Yeah. Their goal is to maximize their ROI, which is return on investment. So I think a lot of founders are quite naive in that regard. They think if they manage to sell their idea and these VCs bought it, they're going to be there for the long run. And, they're not going to do anything to harm the product, the startup. But if they see a way to scale it faster and make more money, they will do that, even though it might not be the most sustainable way for the startup. So that's something I think really more founders need to think about. And I do see the trend going upwards of more bootstrapped founders, more bootstrap startups. And I think that's amazing. It really creates this weird loophole effect where if you haven't raised VC money, then you can get the best market makers, then you can get the best centralized exchanges. And it creates a lot of hiccups on the way, but as we learned, I think in the past couple of years, there is no secret sauce for anything anymore. Centralized exchanges are not going to help you be successful. Market makers are not going to help you be successful. You need to experiment, find new ways, or just do it on your own to try and get there. So it's not that you're losing much just doing it on your own. It's going to be maybe harder. It's going to take more time, more ambition to go through the hesitations and doubt from a lot of other people. But I do think in the long term, more gritty founders will survive and more quality product will survive as well.
Yeah, myself, I also work a lot with venture capitals, with business angels. I have some experience at this sense, and I'm also helping startups, to connect with investors. And what I noticed actually compared to 3 years ago, right now, investors were raising the same question, do you have traction? Do you have team in place? Can you prove that you have market fit? And this is what's important right now, nowadays. But comparing with 3 years ago, it was like purely investments done based on hype. Everybody was selling the idea of some buzzwords, let's say, and investors was easily investing into the projects. Right now, I think the situation a little bit changed. And I agree with you that, just only real products can, have it fit. For the founders who not fully may understand, what you do, can you just explain about your role specifically in CoinMarketCap, what you can do for them?
Yeah, of course. I run CMC Labs and CMC Launch programs. These are both marketing accelerators. CMC Labs is more for mid-maturity projects. So what I mean by that are teams that already have built a product, at least minimal viable product, that already figure out how to capture that initial traction, right? Initial user base, either like whitelist or actual product base, and also manage to shift it to a sphere where if the product is launched, they are able to gather revenue streams, they are able to, fundraise to be able to scale their product. So once they have those kind of like threshold check marks done, that's where CMC Labs could really come in and help take everything to the next level. And then CMC Launch, on the other hand, is a program for a later stage project. So those projects, that figured everything out, they already have traction, they already have the product, everything is going well, but they really need to step up their game in terms of being the front runner in their sector, in their industry, right? They need to amplify their brand name, that it would capture the most mind share, it would capture the most market share as well. So we have that, in quite a few sectors in the industry where we have one or two front runners, and if a new player is coming into town and they're doing everything right, they really need to be, considered in that first thought, together with those already existing players. So that's what CMC Launch does. And overall, like both programs, they're very marketing focused. We built a lot of internal tools within CMC. Not a lot of people know that, but I think around 80% of CMC employees as a whole are developers, and they are building a lot of new things every day. So for CMC Labs and CMC Launch in particular, they built out Community Quest, which allows for both on-chain and off-chain activities. In the industry, we've only so far had off-chain activities, right? Follow us on Twitter, subscribe to our channel. These kind of like social tasks that help to boost the follower count for short term, but it doesn't really bring much long-term utility for the project itself. And that's where a lot of problems have come from airdrop farming, etc. So we've counter that with, attaching those social tasks with actual project tasks. So for example, if you are a trading platform, right, you can actually put up tasks. You need to do this many transactions, you need to deposit this much money, you need to, play around with these many services like within our platform, and then you will be rewarded for it. So this is kind of like improved airdrop system where both the user wins for playing around with the platform and being this almost testnet user, right? And the project wins from these interactions because the user contributes to their traffic, it contributes to their volume, it contributes to their revenue streams. So it's really a win-win situation, and it has been perceived very well by CMC users as a whole, because obviously everything we do with CMC Labs or CMC Launch, it is targeted towards our CMC audience. And to be able to interact with projects that are vetted by CMC, are vetted by our partners, are vetted by these venture capital experts, it really, I think, puts a level of reassurance around these founding teams as well. This is just one of the examples of how CMC Labs innovates and really tries to bring additional value to founding teams.
Okay. As I understand, you have quite a huge network of venture capitals, our investors. So can you help your community also to get the capital for growth?
Yes, 100%. This is a very important part because I think I'll make a distinction right now. When you hear about accelerator, you usually, think about super early stage programs, right? When the startups are just building out, they join these accelerator programs where they help guide them, how to think about your product, how to think about your roadmap, these kind of, advisory matters. Where CMC Labs come in this mid-maturity stage is when founders have figured these things out, at least the threshold of them, right? And they know exactly what they want to do, but they need amplification to do it. They need, exposure, they need user acquisition, they need quality content, they need a really valuable and reputable partner to help them push it forward. And this is where CMC Labs comes in. And I think to do all that successfully as well, you need to have more partners. You need to have more backers, right? The teams we work with, they are building products that do need capital to scale, right? This is kind of, a small bubble of projects that, fit the narrative of what we usually do in the crypto space. So we are very hands-on. We have a vast VC network, vast service provider network, vast ecosystem network, right? Where we can connect our teams with those rights, investors, service providers, overall partners to integrate deeper and help them spread the impact across different avenues.
Thank you very much. That's great to know. And I think it is going to be very useful for people who will be watching this. Can you, Leonardo, tell me also, what is your ideal profile as a project? Let's say, what kind of narratives you're looking for? What is your ideal startup supposed to be in order to come and go throughout your program?
Yeah, that's an interesting question. Overall, CMC Labs is very sector and chain agnostic. So we don't focus on particular niches that projects are building in. We are open to all, because obviously having CMC token data platform behind all that, this is something we want to nurture as a whole and not particular sectors, right? But if we go into the nitty-gritty, the kind of vague requirements are post-MVP product, initial user base, innovative product. We don't want 1,000th AI agent marketplace or 100th layer one. We don't care about the funds you raised, if you're just building another product that we've seen 100 times. We want something unique. We want a new solution, and not a solution that you tweak the existing one and hey, this is a whole new product. That's not gonna sway us at all. So for us, I think the key maybe product related aspects are innovation, sustainability, and scalability. Innovation I already touched upon a bit, but sustainability means, can we actually expect you to survive the next 5 years? Different cycles, different institutional events, different retail events, right? Will you be able to, march through all of those struggles and still remain relevant? And then scalability aspect is, can we actually expect you to reach the next 50 or 100,000 of users? Can we actually see your product being in demand and people willing to pay for it, in their daily, monthly lives to sustain you? So these are very important and very VC-like considerations. And when we go back to the nitty-gritty, as I mentioned, post-MVP, initial user base, some VC backing, and revenue streams if the product is live.
How has fundraising in crypto and Web3 changed compared with previous cycles?
Yeah, it has changed quite a bit. I think if we look at 2020, 2021, there was a lot of excitement, both from the VC side of things and also retail. There was a lot of money floating around, right? So we were more opportunistic. We were willing to throw money at simple decks and no products. We were willing to expect things and not to have any kind of proof backing it already, right? And that's where we saw a lot of, especially within gaming and NFT industry, startups like really take off and raise millions and hundreds of millions. And only a couple years later, there was this kind of crash where, hey, we put so much money into it and nothing has happened. None of those projects launched. Well, almost none, right? None of them garnered any ROI. Users are not happy. They don't have anything to play around with. What are we doing? And I think particularly like the gaming and NFT cycle brought this kind of change within the industry, where right now it's much harder to raise. VCs are already expecting some social media presence, some traction in terms of, whitelist or testnet users, some, very clear technical and roadmap guidelines where you can really showcase that, you've thought out your business model. This is how you're going to scale. These are the networks, you're going to tap into. And this is the capital. Not that like, oh, we need 5 million to scale, but this is how we're actually going to distribute the capital that we receive. So the founders need to do more work and more research, which I think is a good thing. I believe right now being an entrepreneur has become this kind of, maybe I can do it tomorrow, and it's not a risk at all, whereas in reality it's supposed to be this high risk endeavor, and not a lot of people are even capable or willing to take it up. And right now, half of us are entrepreneurs and, happy to, launch a startup as a side hustle, etc., etc. So I think that kind of skewed the overall success models of fundraising as well, because the amount of startups fundraising is insane. And if you take a look at, what already has been built, obviously we're far much ahead than in 2021, let's say. The differentiation point becomes so much more difficult to achieve. And in terms of fundraising, I think VCs have also dried up. Less LPs are willing to, put in money in the VC model, because obviously VCs just, I think physically they really can't reach 10x or 100x, obviously, at these times at all. And is it, worth it for these LPs that are keep, throwing money at these VC managers to keep going on like that? It's not really sustainable, right? Maybe they can start directly investing in cryptocurrencies themselves or other Web2 opportunities. So in that regard, we have more startups fundraising and less people willing to give them money. And we've seen a lot of VCs also pivot to liquid deals, to OTC deals, right? So really looking into later stages of projects where they have launched the token, they have mainnetted, right? They have everything to show for, and then they just need to keep up with their performance to garner the interest from VCs. And it's also pushes the ballpark much further when you start a business. So there are so many different intricacies and changes, that has happened in the past 3 to 4 years. Some for the better, some for the worse. I think the VC model broke a bit more these years, where VC managers don't really understand that, investment is supposed to be high risk. You're supposed to be very diligent. You're supposed to keep on doing analysis until you find these gems. And now we see all these VCs pivoting to basically easier ways to make money, which makes them simple asset managers or personal funds rather than VC funds. But that's a bit of a sidetrack. So just because of these changes happening internally in the VC world, and obviously the scale of startups that is rising, that has changed the dynamics quite a bit.
What I really noticed, that venture capitals right now, we are looking for equity deals instead of, investing into the tokens. That is a major change, I think, in crypto space at least. And investors, we say that we don't want to invest into the tokens anymore just because it's not the asset for them to invest to. We are looking for ownership in that company because we will have control. Let's say some options to control the company. So I think this is the major change, what I see, and multiple people I speak with. We tell me that tokens it's like addition, like bonus on the top of equity. And this is the new structure of the proposal. So yeah, so there are many changes. And another thing is, I think that we have way too many startups who actually developed products which are not related to real life use cases. And basically those projects, we built something which has no real use case. We forgot, that we can use blockchain actually to really help companies in Web2 to solve real life problems. And for example, like cross-border transactions, this is like real stuff where you can actually build the projects and you can build a business around and use the blockchain technology for the real life. And all those NFTs, as you said, meme tokens, just temporary stuff, which is going to have zero value in the long term. So yeah, so this is a major change right now.
Oh, so many things to unravel here because you made some really good points. So I think in the next 5 years, maybe already, we're gonna really see substantial shift to blockchain not necessarily being the sparkle, on the surface, but something that runs underground, right? Because as you mentioned, there are so many use cases for blockchain, right? To make things faster, to make things cheaper, to make things more transparent. And we, as a young industry, we want blockchain everywhere. We want crypto and Web3 and, everybody screaming how amazing this is and how we all want to use it. But I don't think this is going to happen, right? Like there is still a lot of uncertainty. There are still a lot of barriers to the industry, for a regular person to enter and properly, utilize it on a daily basis. So if we manage to get the blockchain technology being used, underneath the Web2 cycles, right? Like underneath the platforms and, firms that run the world, basically, I think that would be such a big win already for the industry as a whole. I really also liked your point, about more VCs turning to equity. So basically coming back to the Web2 world of doing things. This was always a small critique of our industry that, we started as these decentralization rebels and now we're, growing up and becoming more realistic and maybe Web2 is not that bad. There are just some things that we can improve with the technology that we have built. And I think because of that, equity even right now makes more sense than it did 5 years ago, right? More companies are able to do IPOs, right? So there are more opportunities to exit and get your money, except for getting that company acquired, right? Or these rather rare occurrences within the crypto industry. The token was always supposed to be an additional value. And right now it's usually the main course, right? Like we all want the token. Once the token launches, it becomes the main product. Nobody cares about the actual product. If the token fails, the company has failed. Even though they may be very reputable, they may make all the money in the world, they may be super successful, nobody cares about it because the token is the representation of the whole company. So I think if we do manage to stay away from the tokens as much as possible, it will create a bit more of a healthy ecosystem as a whole. I'm being generous here, like 90% of the tokens shouldn't exist, right? They're useless, they don't bring anything, they're purely a gambling instrument, right? Like for each of us, right, in retail and not even. So if we able to filter it out a bit better, if VCs are able to turn away from this very quick cash grabbing exit liquidity, then we can make the industry a bit healthier and more sustainable. Because the token side of things, it has created very bad loops. It has created very bad experiences that even the founders that are trying to do it right and are taking the longer route, they're still struggling so much because everyone is so used to the systems that are running right now.
Okay, I agree with that. And actually, I believe that this is the new phase in crypto space. I believe that majority of people learn their lessons and it's going to be so many nice and positive changes also in that market. The venture capital, we understood that it's not a good strategy anymore to invest into the tokens because we are not performing very well and there is no real value behind it. More and more people get used to crypto and we understand more and more. And I think, all those institutional players in the market who are coming and buying Bitcoin, major tokens, all those changes is going to normalize the market a lot. And, I'm looking forward to see the future in a couple of years, what will happen next. But as you said, I think companies who actually will be focused to real life use cases, we're going to win in the long term. And those who basically build something based on hype or just another project from any other 1,000 of similar projects, those guys going to fail. Leonarda, as you already have a lot of experience working with multiple startups and you did due diligence on them, what signals basically can tell you that this startup is ready to scale or that startup specifically is just still in an experimental phase?
I think it all really starts with a team. And that's something, we all probably heard 1,000 times, but it's the right thing to take a look at first because products will change, services will change, everything, from the roadmap to tokenomics will change because that's just an inevitable way of moving forward with a startup, realizing more about the space, learning more, about what your users want, what, your product demands. But the core team usually remains the same. And the way they drive the project, the way they drive those partnerships and that scaling opportunities, that will be everything, right? How much of technical salespeople they are, how much they understand the industry and the product they are building, how motivated and driven they actually are to make this work. I think for maturing projects, I've seen a lot of cases where the founding teams, they jump around like 3 different projects, right? They're trying to do so much because they want to basically maximize the short-term returns, right? And that's not a great look on the product success from the investment side of things, right? From the long-term success anticipation perspective as well. So I think in that regard, the team really needs to be polished and then well positioned, both with the previous experiences that they have. Obviously, if it's a second, third time founder, you're more willing to trust them because even if they failed, those failures have taught them so much, of how to run a team, how to build, how to scale through different cycles, etc., etc. So the team always comes first. Then I think just purely where the product is and where does it stand in the competitive landscape, how you're able to differentiate it, how much will it take to fully launch it, how capable will it be, simply said. And the product development timeline will also align very significantly with the buzz, right? So is this the good market for something like that being built? How many of the competitors are also building something like that? Or if it's a new sphere, how much of new ones can we expect, right? So there are so many overlapping avenues where, if you're very early on, there is a lot of research and a lot of just thinking through of future possibilities that needs to be done. But once you're, in that maturing space, everything is kind of clear. I mean, nobody is going to turn up next week saying, hey, we're building this. We don't have anything yet, but, this is where, we're starting. Like, you're not afraid of these super early stage, competitors anymore. So I think the development phase, convoluted with the competitive landscape is definitely a big part of it. I think the resilience to market conditions is also a big thing. When you're early on, I think you lean more towards like pivoting and, adding more things, removing more things. It's easier because nothing is yet done. You haven't put that much capital, both human and financial, into something that you're building, right? But when you're maturing, it becomes more difficult to pivot and more difficult to adapt to something that's happening in the industry. And if you do it very rapidly, it's usually not a great thing for the project that you're building. So I think the adaptability becomes more rigid, but it also, in a long-term scale, it makes sense. Like, you can do it slowly and gradually. And I think that's a big differentiator as well. And the mutual value is a big thing too. Like, what can you offer to your partners and what can your partners offer to you? If you're super early stage and you have, I don't know, hundreds partners decks slapped on your partners logo slapped on your deck, for me, that usually shows nothing. Like, nothing is happening. You don't have nothing for it to be happening with these partners, right? And once you're maturing, I think the product integrations, the co-marketing campaigns, the tapping into each other's networks and that opportunity discovery is very, very important. And, the mutual value always takes over one-sided value, right? Like, purely from the branding side or the product side. So whenever you're able to offer something, I think the opportunities also scale quite a bit. Yeah, I think, these are quite big, but it's difficult to narrow it down to very concrete matters when it comes to startups, because obviously it differs so much depending on the sector you're building, the stage you're in, team that you're with. So yeah, from kind of the general viewpoint, I think these would be my top picks.
Very useful insights. In my experience, working in crypto space, what I learned that, and I think this is the mindset what actually normally venture capitals are trying to adapt to the thinking framework. We're looking for is this project is solving the real life problem. This is really important because if you're going to build a product which is not needed in the market and actually nobody wants it, so you cannot perform very well as a company because there is no business here. Another point is seasonality of the business in crypto space, as you know, whereas like bull run, bear market, and all the cycles repeats again and again. And I think companies somehow need to find the strategy how to survive those seasonalities, let's say, in the business, in this specific industry. And so those are the most important things, how you're going to handle the market conditions. As I was mentioning, you need to be adaptable. And I think all the project needs to think about this very seriously. So if you're solving the problem and you are adaptable, I think you have the right two parameters, which is going to help you a lot in your business in crypto space. Majority of startup founders will want to go into the market and get the capital straightforward. How do you think, is it really so important comparing with, for example, things like access to the market or distribution? Is capital always having the bigger value?
It's a good question. I think 99.9% of the time you won't get the capital if you don't have any of the network value, for your project. You need to showcase that you have the right tools and the right people and the right partners to get to the next level. And you can't do anything alone in this business, both in the startup business and in the industry as a whole. I think Web3 is much more intricate and much more relationship based than Web2, in which it's also very important. But because things move much faster in Web3, you need to have the threshold of the network to back you up right from the get-go. So if you're a startup founder, you're building something new, or you're thinking about building something new, I think the best advice that I've seen out there is to really start building those relationships, not necessarily, in a matter of, hey, we're building something and we want you to back us, but I want to build this solution in this sector because X, Y, and Z. I think, you're an investor in this sphere, you have ABC portfolio companies that building, something relevant. What insights have you garnered, right? What makes it interesting for you? What would you want to invest in this sphere? And this would not only give the knowledge base for these founders to kind of gauge what could be relevant and interesting and impactful for these investment firms, but also, just make them memorable. All the VCs have people coming to them all the time. Hey, read my blurb, view my deck. I want you to invest that amount, etc. The fact that you're willing, to build that relationship, to be respectful of their time, to use their knowledge and experience, which they like to showcase, they garner that through years and years and years of work, and they have a lot to share. So obviously you need to be respectful of their time and not just, keep on calling that information out of them. But if you do that right, I think building those relationships way before the fundraising can be so helpful. And that goes not only for VC firms, but also for big partners, big ecosystems, right? That you may want to expand to or start building onto, right? You always need a home in Web3. So building that initial layer for your home, adding up those bricks, it can really make a big impact. So we've had founders that raised, as nobodies, right, millions of dollars just because they had an amazing idea or somehow like the hype caught on, but that's not gonna happen to vast majority of the founders. So you need to do the work, you need to do the research, you need to know who you're targeting, who would make sense for you, and go for it from the get-go. Because I think research is so underrated in the industry, and not just purely, I'm reading articles and newsletters. No, actually knowing who you're talking to and who you will need in the future. You need to be prepared for everything, and that's why meeting these investors in conferences, you have like 5 minutes of their time to make an impression, to make them remember you from thousands of faces every day. And if you're ready, if you're researched, if you know what you're talking about and where you stand, it can really make a big difference.
I couldn't agree more on that. There are too many founders who believe that we just have idea and tomorrow we're going to start raising capital. No, it's not going to work. In my practice, I've seen a lot of good examples when the guys was building something 2 years ago and we didn't raise capital at that moment, but we actually invested a lot of time and effort to have these regular conversations. And after we came back with a second idea, we finally raised the capital because those investors already knew them. We could trust them. We had multiple conversations. And I think the majority of startups right now, we're just forgetting to invest time and effort. In most of the cases, like so superficial approach to investors that investors basically don't know who you are and what you want from them. And we are most likely going to deal with the people who they know. So this is the key points. And I'm really thankful to you that, basically you was touching those points. And I think it's so critical to understand for people who wants to build something and get in touch with investors. So, it's not going to happen in one day. You need to actually spend a lot of time and power to prove yourself before you get any capital.
Exactly. Trust and recognition are everything, and it's much harder work to do it right. And that's why we have a lot of startup founders that are not really doing it right. They try to, accelerate the process. They try to find the shortcuts. It will work from 1 out of 1 million maybe, but if you really don't want to count on the astrology and stars for your startup, like you need to put in the work.
Yeah. Okay, Leonarda, can you share the advice you really feel that you would like to give to the startup founders or for people who wants to start a business? Do you have something to share, which actually really important?
I think really consider and research if your startup idea is worthwhile. And I've touched on it a bit before. It's so easy for us to become these entrepreneurs and start our startup journeys, and it takes a lot out of the founding teams. It takes a lot of resources overall. You take up time of your partners, you take up time of investors, and it needs to be a net benefit overall for you, for the partners, for the industry as a whole. So really, really consider if it's worthwhile for you to even start a startup, and consider if the idea that you have is really that innovative and amazing to really start working on. I think if more people did more research on what's being built in the industry, what competitors they already have, what kind of narratives people are interested, and what's happening in the industry overall, a lot of these teams wouldn't start the work because it's hard, it's dreading, it's expensive, both with human and financial capital, and it's just wasteful overall. I mean, building in crypto, use up a lot of energy and electricity and, all these things that are also bad for our planet. So be sure to be mindful of, yourselves and everybody else's around you, time and capital.
Thank you. It's really good advice. Leonarda, it's really pleasure that you came here into this episode. I really appreciate that. I really wish you good luck with your ventures, what you do right now. And I hope you're going to help a lot our audience to, the people who will be coming to you. So thank you. Thanks one more time. I really appreciate that.
No, thank you for having me. I think we had a really fruitful conversation. There are a lot of, just human moments and also industry moments that we've covered. And I think it's good to sometimes stop for a second and think about these things. So really appreciate for the opportunity to join you and hope we can do this again one time.
Yeah, thank you. I hope this too. Thank you very much.
Amazing. See you soon.
See you soon.